With conditions worsening in the global financial system, some major corporations have had their stocks performing well. Mainstream media uses these few and far between examples to project a hoax that everything is just fine. One of the strategies which has been actively used in recent times has been stock buybacks, and it's in the $1 trillion range. Today we will discuss why companies buy back their own stock, and I'll use easy explanations with diagrams. You came here for the truth, so let me unveil that for you. Let's get into this right away today, starting with the meaning of buybacks. A stock buyback, also known as a share repurchase, is a company's buying back its shares from the marketplace. You could think of a buyback as a company investing in itself, or using its cash to buy its own shares. So this is something that I have covered for years, and in recent times we have seen how companies have been doing this more and more. So we'll break down exactly what's going on here. The idea is simple. Because a company can't act as its own shareholder, repurchased shares are absorbed by the company and the number of outstanding shares on the market is reduced. When it happens, the relative ownership stake of each investor increases because there are fewer shares or claims on the earnings of the company. Pretty simple explanation. I'm not going to go into any more details of it for this out of Investopedia. Just a simple thing, but I'd like to get into more details, really the deeper intel on exactly what's going on here. This is out of Bloomberg, some interesting information. And this actually was surprising to me that during the past 3 years, members of the S&P 500 have spent more than $1.5 trillion buying back stock. This has led to a reduction in their shares outstanding of at least 4% in the past year alone. Or has it? So they make reference to the research affiliates, and they did a study. And in that study, they said U.S. companies issued stock equal to $1.2 trillion. All told, the new issues in 2014 exceeded share buybacks. So basically what they're saying is, don't worry about buybacks, everything's okay, until you read the further details. Look at this. The cash flow statement often fails to report the majority of a stock's issuance here. Now, there's 2 pieces of info I want to get to, this one, and I'll show you the actual study they did. Beginning with this. When management redeems stock options, new shares are issued to them, diluting other shareholders. This reminds me a lot of what happens with our paper fiat garbage dollars, that the more that are printed, the more that are added, the more dilution that occurs. A buyback is then announced that roughly matches the size of the option redemption. This facilitates management's resale of the new stock. And if I quickly forward ahead to their actual study, it says, for investors in the aggregate U.S. public equity market, buybacks are simply a mirage. So when they are basically suggesting that this is a good thing. Stock buybacks are a great thing. For investors, they're simply a mirage. Very interesting information right here. And I don't want to get into too much of a detail for this stock buybacks. You can research it for yourself. I do regularly cover it here on the channel. But I wanted to show you a couple diagrams. Look at this. Investor CEO feedback loop. Rather than using cash flow for long-term research and development, something I'll point out later on, many companies face pressure from shareholders to buy back shares. A buyback can boost earnings per share, EPS, and total shareholder return. So there is definitely that pressure there, but there's a lot more going on. Let's start with this. Just quickly, I'm going to read through it. Board sets EPS and TSR as compensation metrics for the CEO. Investors demand better returns. Of course, it's always about corporate profits, as I've said many times before. The CEO lobbies the board for a share repurchase program, buys back the stock. Shares repurchases increase short-term share prices and the EPS, that's the earnings per share. And then last but not least, CEO pay increases while less money is available for the R&D and capital expenditures. We saw this exact thing take place during 2008 and after that, as they got all their bailouts, that the CEOs got bigger bonuses than ever. Meanwhile, the companies were hurting. So let's look at this. CEOs' pays boosted from giving shareholders cash. Interesting note. A large part of the IBM CEO compensation is based on earnings per share, again, which gets a boost from the stock buybacks because the number of shares outstanding is reduced. In 2014, about 4.4 million was tied to the metric. Okay, look at that. You have the CEOs coming out there lobbying their board saying, look, we need to purchase some shares here, repurchase the shares, go ahead and do it because I need to buy a new yacht. And that's exactly what's happening here. You can see the pie chart for yourself if you'd like to get into it. I'd like to just move on to what I discussed in my book. This is an excellent book. I mention it all the time, but it's Infectious Greed by Frank Partnoy. And what he talked about how during the 80s, during the 90s, we had financial institutions starting to hire people with PhDs, but they had no financial knowledge at all. Why? Because they were starting to create these algorithms that are being used today. But guess what? Further on, they're literally gambling in the stock market. At the very last line here says, Partnoy states that it got to the point where traders at Enron were even creating financial instruments to gamble on the weather. That right there is the most absurd thing I've ever heard. Bonuses for the CEOs were absurdly high, and in some scenarios, they actually talks about this in the book, real world examples. They would even rip up $1 million checks as if the amount was an insult. That's how much money was to be made about all the financial gambling that takes place. There's an infinite amount of ways for them to make money. They have all of these different central banks around the world printing money and buying up shares of these companies. They have the stock buyback programs, which I've talked about countless times. They have so many different ways to take money from you and I and put it into the hands of the richest of the rich. This happens to be Macy's looking at the buybacks, but I'm just showing you this as one example. Because they're engaging in all of these stock buybacks, they don't have money to use it for research and development, to have new products on the market, to have new services that potentially could actually legitimately help people. Many products out there are actually very useful things, services out there that you could be providing to the public. But instead, they are there in many different reasons why, but they're there to boost the CEOs' checkbooks. And you see that the way this works, their wallets keep getting fatter and ours keep getting thinner and thinner. This is just the way it all works. They use this as a scam in order to make profits. What else is new here? Corporate profits for the major corporations, and we get stuck with the short end of the stick. If you found this video informative, please give me a thumbs up. This is part of the eCourse. I am one of the few out there who is trying to provide a basic level of knowledge to the public for many of those out there who don't know. So this is the eCourse. It's a very simple thing that I like to get into occasionally, which will help out people who aren't necessarily want to get into the deepest of the deep information, or perhaps they're just starting out. You don't get financial education in your school. You don't get what you need in the mainstream media. So I am here to provide this foundation of knowledge to the public. This is at the eCourse. It's available at themoneygps.com/free eCourse. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. And you can actually look through the book. If you go over to Amazon, they have a look inside feature, which allows you to flip through the pages of the book and see if you like it. Take care.